What's up guys, welcome back to InvestingPH. Starting 2023, our market is doing quite well. We are now back to the 7,000 level. The last time stocks were at this level was back in Feb 2022 when we hit a high of 7,500, which was the highest our market has been ever since the fall caused by the pandemic. Although we are still far away from where we've been, which was past the 8,000 level, and not to mention our market's all-time high, which made it up to 9,000 back in 2018. But on the brighter side, even though it was like that, if you are a long-term investor like me who's just starting, the stagnation of the market was a great opportunity to bulk your portfolio with strong companies. These companies are the ones that rarely trade at a low price, but during these times, we got them at a discount. So I don't get why a lot of investors, especially small investors who are just starting and are so concerned about the market trading sideways for a long time, they focus solely on the short term rather than the long-term advantage of what is happening right now. Imagine it like this. Aren't you happy when your favorite brand of shoes goes on sale? And not just that, it goes on like that for a long time. This way, even though you don't have enough money now, you would still be able to buy it again some other time because it had stayed on sale. This is the same for stocks. Imagine, you get to buy great companies at a discount, and since we are just small investors who are relying on our monthly income for our investments, we don't have a huge chunk of money to buy a lot of it now. But if the market stays like that for a long time, even though you don't get those early gains, you would be able to buy a lot of it, and when the market does climb up again, the bigger the potential gains you get. And that's not the only advantage of it. You also get good dividend yield when stocks are down. So not only are you growing your portfolio for potentially greater returns in the future, but you're also getting a good deal in dividend income, which creates more returns for you in the long run. And as you're waiting for stocks to climb, you are still earning money. Compare this if the market rises so fast. For us starting, this may seem great because you can boast to your friends that in your early years as an investor, you already have huge returns. But the big question is, how much have you invested? Is it a good amount of money to change your life? Or is it just for boasting some small returns? This is a common problem for investors. They focus too much on the short term instead of widening their horizon. Think about it. What's better? Getting a good amount of returns now but such a small amount? Or bulking your portfolio for greater dividends and capital returns in a longer period? And one difficult thing when the market goes up, it gets harder for us to find great opportunities. We would be lucky enough to find 4 or 5 great companies. But during a recession, almost everything is on sale. Even big companies that rarely go down are on sale. So anyway, the main lesson is to never focus on the short term. If you are an investor, your time horizon should not be less than 10 years. And as a warning as well, since our market is somewhat recovering, do not base your decisions on what's trending. Do not fall into the trap thinking, oh, this stock is rising so fast, better invest in it. No, you still have to follow your checklist and evaluate if that stock is still worth investing in or not. I've seen a lot of investors fall into these traps when stocks suddenly rise. I've even received a lot of negative comments when I evaluated those stocks. They give nonsense explanation of why the stock will continue to shoot to the moon, exaggerated growth expectations for a company that isn't even earning anything now. They fall into the trap of buying higher. That wasn't a mistake. Not just buying high, but buying higher, since they bought a company that is already exaggeratedly high in the first place, expecting it will even go higher. So remember, always to go back to your checklist and do not rely on gossip. Go to the company's financials, look into what it does, if it's really worth investing in now. Don't just pretend you know a lot about a company because you've heard this random guy in the group you're in saying a lot of nonsense things about the company. Some of them just want to hype the stock because they want it to go up since they are invested in it as well. Do not be that stupid investor. That is not a good long-term strategy. Anyway, to conclude my long introduction, always remember the words of the great investor Warren Buffett. Be fearful when others are greedy, and be greedy when others are fearful. True enough, I stayed with this belief and my portfolio has grown to a good amount that I can already feel the dividends I get, and this with the market far from recovery. My dividends in 2022 have reached 81,000 pesos or an average monthly income of 6,754, which for me is a good amount. My dividends are already helping me buy a lot of stocks, and it's now close to being able to follow the 8K rule, which is to invest more than 8,000 in every transaction to minimize brokerage fees. And to start this year, I've already gained 7,048 pesos worth of dividends. Ayala Corp, Costco Capital, Double Dragon REIT, FGen and Pure Gold paid out this month. This makes my grand total dividends received to 140,000. This is already 8.6% worth of my invested money, and this will earn me more dividends throughout the years, and there's more to come next month. MREIT has already announced its first round of dividends this year. Hopefully, I would be able to beat last year's dividends, but again, I won't force it. I will still follow my checklist whenever I look for dividend stocks. So anyway, my total invested money has now grown to 1,622,400. Now I can invest a large amount of my monthly income because I really cut my spending. Although it was hard at first, once you get used to it, you would even go further, especially when you see your investments growing and growing. Now since the market has climbed a bit, my total return is 17.22%, which is equivalent to 279,320 pesos. The largest contributor to my gains is DMC, where I gained 102%. This is only pure capital gains. Next is my third largest investment, Aboitiz Power, getting 34.55% worth of capital gains. Now if we include dividends received, my returns in DMC will shoot up to 158.7%, Aboitiz 47.4%, Metrobank 41.4%, DNL 27.1%, and some of the stocks that were negative a while ago, if dividends are accounted for, actually gave me positive returns. Only 5 stocks in my portfolio are still in the negative, which I'm not even concerned about since I've analyzed them and know they are strong companies. So if I have enough money, I would even buy more of it. By the way, this data is from Simply Wall Street's portfolio tracker, so if you want to try it out, you can head down and use my link to sign up. You'll get a forever free usage of their basic plan, and you'll also get a 14-day free trial of all their platform's features, from stock analysis, portfolio tracker, and other tools to filter out stocks automatically, and a lot more. Not only that, if you do avail their plan using my link, you can get 30 and even up to 40% discount. So try it now, it would really help you in your investing journey. Anyway, comparing my portfolio to the index, the PSEI is still down negative 16.3%. Now if you're wondering why FMETF, a fund that tracks the PSEI, has better returns than the index itself, well, because the FMETF also accounts for dividends received, that's why I'm now including it in my comparison. So far so good, my portfolio is still maintaining its lead, which I'm very happy with. Although the movement is quite the same since a lot of the stocks I have are blue chip companies, the only thing that differs is my portfolio has a larger dividend yield than the index. Moving to the stocks I bought this month, the first one is AUB since their stock price dropped to around 40 pesos, and I've added more stocks to Double Dragon REIT and Globe. I've also added after a long time to Shang. This company has been trading for a low price for quite some time, and even though they cut their dividends because their earnings were affected by the pandemic, they still gave out a good amount last year, which is 6.4% yield. So what more after they get back their pre-pandemic earnings? That's why I've added more shares to it. Also, since most of the companies I hold have already risen in price. With that, there were a lot of changes in the order of my holdings. LTG, Megaworld, and Aboitiz Power still takes up the largest share. This is now followed by MREIT, DNL, FLI, and Globe has now taken the 6th largest position. I'm really happy with how my portfolio is growing, and with a good position in these companies, I got a good dividend yield. Now I've also updated my index fund investment, which is in my VUL. Surprisingly, it has now grown to 96,000, so it now takes up 5% of my whole portfolio, though I don't include this in the overall amount I'm showing. If included, my total investment value would grow to 2 million, which is another milestone for me. I've come a long way to reach this amount. When I started my YouTube channel, my portfolio was only 750,000. So I'm really happy with my progress, and I hope it would continue to grow more in the future, allowing me to retire off of my dividends. So anyway, this ends my update for this month. Remember our lesson a while ago, be fearful when others are greedy, and be greedy when others are fearful. This didn't come from me, but from the greatest investor in the world. Listen to the proven legends, not some random comments or analysts predicting what the future will be. Invest in companies you know and understand, and you're off to a great start. So I hope you've learned something, and if you did and still haven't clicked the like button, then I'd appreciate it if you do so before leaving. Thank you and see you in the next video.